book full of strategies. There are so many strategies in here for trading. These are advanced strategies that we're going to go over. It says there's 30 fully tested strategies. And I've heard from some quantitative developers that this is the book of God. This is the GOAT of all trading books. It was 75 US dollars. Let's see if we can get some alpha out of it, though. I think that's the question. Can we make $75 off this book? Yes or no? I'm not going to read the book word for word. No way. Not today. I've been trying this new thing, dude. So essentially, I go ahead and I read the table of contents. And I use AI to walk me through the table of contents, dude. And that's what we're going to do today. That's what we're going to do today, because we're going to learn. We're going to come up with strategies that aren't even talked about in the book because we're just going off their vibes. Right? That's going to be sick. I think I might even dive into the titles. I don't know. Whatever we're about to do is about to be life-changing. So if you leave, you're done. You're not going to be able to compete with me or any of the homies that watch this entire video. If you're not watching the whole video, just leave now, because you're about to hear some things, see some things that are crazy. All right, let's explain everything on my screen and the noises and all that stuff. Far left is the changes in prices in crypto. Yeah, that's it. You see right next to the left, these are all the orders coming through. Bigger orders to the right. These are the total liquidations the last 30 minutes, hour, and so on and so on. These are the big licks here. These are the big licks. So somebody just got wrecked. 100K, 300K, so on and so on. It's a crazy world out there. I hope you're not trading by hand. Probably the most dangerous thing you could do with your life is trade by hand. Because you get addicted to it, dude. And you lose everything. I just saw somebody lose 10 mil. Literally, I just pulled up my Twitter and he's like, yo, I had 10 mil 1 month ago. And now he has $0. How would that feel? That's why I set out on the journey to automate my trading. Okay, you see up here, this is my sniper. In the top middle up here, that's my sniper. Solana sniper. I showed how to build it here already. So you can see it on my YouTube channel. Now on the right side here in the blue and the purple, blue and the pink, these are the biggest orders. So I'm watching all the orders all day, dude. And we're gonna watch them here together too. Now right here to the far right, these are the liquidations. This is the fun part. This is when the exchange is like, you're done, buddy. Get it out of here. This is all my cash now. It's all my cash now. All right. Hey there. But before we get into this, dude, no, let's just go straight to it. Let's go straight to it. I'll just put this on my note sheet. Update recent licks to all be on M's. And a little skinnier. Look at that. Moondev is getting better at not getting distracted. All right, let's get it. So again, here, let me show you the book that I'm about to read, because then if you really want to buy it or something, I have no affiliation, but I have zero affiliation with these guys. I just read every single book that I can. Advanced Futures Trading Strategies by Rob Carver. Go get his book if you want. These ain't them. These ain't them. Let's go ahead and figure out where it is. Advanced. It's this one right here. Okay, it's only 40 bucks. But, you know, we'll see what we can pull out of it. So this is the book. You see the book now. Now I'm going to dive into the titles. I read the book later. I'll read the book on my own time later. I'm not going to sit here and read a 611 page book with you, but I want to get all of the concepts down, because I don't need to read. I'm looking for stuff. I'm searching. I'm just a searcher searching for new trading algorithms. Well, the strategies, right? And then I build them into algorithms after backtesting them. Hey, if you're new here, welcome. My name is Moondev. Every single day I stream. I show everything that I'm building. Now, this is the process that I follow. It's called the RBI system. And this is really good to know if you're looking to get an algorithmic trading, because everybody wants to run to the bot. Everybody wants to build a bot, and they want one bot that makes them $1 million a year or a day, whatever. I don't know, whatever your goals are. But that's not the correct way to do it, in my humble opinion. I don't know everything now, but I've been here for 4 years, so I know 4 years worth of stuff. Okay, so instead of running to the bot right away, what I do is I spend my time researching trading strategies and alpha generation techniques. So you can use Google Scholar, you can buy books. I've got a ton of books here, podcasts, watch videos, and so on and so on. And you got to find your own edge. You got to find your own strategy. I can't give you something that works, because if I gave it to you, look, dude, there's like at least a few hundred people that watch these videos. I don't know, but that strategy will go to zero. But I can show you how I find strategies, and that's what we're doing today. I'm opening a book, B. Every day I'll be reading. And then you backtest those strategies. So you start with research, then backtest, then implement with small size into a bot. That's it. All right. Let's get it. All right. You ready? We're going to go ahead and dive all the way in here and try to keep up. All right. Please keep up. Please keep up. Throw the 777 in the chat whenever you see me anywhere, dude. That's just sending love. I truly believe you can have anything in this world if you lead with love. All right? It is what it is. I'm going to keep leading with love. I'm going to keep sharing everything. I believe code's a great equalizer, and that's why I share this stuff. There's no other quant in the world that's going to share this much. All right? So I'm happy you're here, dude. Get all the data sources up here, and then I'm just going to go right here to this page here. This is just a little Notion sheet. And we're going to just start building ideas out. So let me go ahead and use Luxy, because Luxy is so nice at helping me study. Because I can just save little prompts like this, dude. I'm about to read this book, so I saved the prompt. I'm about to read this book about trading strategies, so I want to go over and study the concepts as deeply as possible before I actually read the book, because then I will be able to understand what I'm about to learn, and I'm super curious to get your input, your input on and step-by-step ways of executing these strategies. So while I'm gonna read this book, I'm not reading it right now. I'm going through with Luxy and taking in the titles, the ideas they have, and then just going and understanding everything, because the connections I've made from before even reading these books are crazy. And I try to show everything here, dude. So let's go ahead and dive in. This book is so big, I don't have room for it on my desk, but we'll work with it. We'll work with it. I'm happy you're here, bro. I'm happy you're here. Okay, let's do it. Basic directional strategies. Basic directional. No, that's not that. That's the title of the thing. Okay, so buy and hold single contract. That's really what you're going to start with. We'll do buy and hold with risk scaling. Buy and hold with variable risk scaling. I'm so sorry that they're dropping the ball here with this intro with buy and hold stuff, but let's just see. Let's be open, okay. Because they are scaling out. So let's just go ahead and buy and hold with variable risk scaling. See, that's new to me. Buy and hold portfolio with variable risk position sizing. Okay. And then what else can we put here? Slow. Here, we'll move that to that one next. Okay, let's go ahead and just read and come up with ideas, dude. And put all the ideas here. You can see I did this yesterday too. Because everybody asks, yo, what trading strategy do I do? I don't know, dude. Whatever you come to at the end of the day. So I'm just showing you my process every single day. And I'm not like, I just do what I say, you know? Like I put this Notion for me. You can have access to it, dude, if you want it. Let me go ahead and make sure everything's set up here. You can do what you want to do in this world, dude. I hope you know that, dude. Tap in with a 777 if you believe that you can do anything in this world as long as you lead with love. That's the only way, though. You gotta lead with love, bro. All right, so let's start with this. Let's start with the first one. Buy and hold with risk scaling. Volatility-based risk scaling concept is adjust the size of your holdings based on market volatility. Identify volatility metrics. Use indicators like the ATR or Bollinger Bands to measure market volatility. Scale position sizing. Increase position size during low volatility and decrease during high volatility. Okay, I actually like that. Define maximum risk per trade as a percentage of your total portfolio, adjusting position sizes accordingly. Okay. Momentum strategy, momentum and trend following. Concept, increase exposure during strong uptrends and reduce during downtrends. Determine strength using moving averages like e.g. 50 and 200, like the 50-day and the 200 moving averages, or the ADX indicator to identify trend directions. Adjust positions, scale up positions in a strong uptrend, and reduce or hedge in a downtrend. Drawdown based risk scaling. Adjust risk based on historical drawdowns to prevent significant losses. Track historical drawdowns. Monitor the maximum drawdown for each crypto asset. Reduce position size when approaching historical drawdown levels. Use algorithmic rules to automatically adjust holding based on real-time drawdown metrics. So buy and hold with variable risk scaling. Dynamic risk adjustments using market signals. Change risk levels based on macroeconomic and market signals. Identify market indicators. Use on-chain metrics, economic indicators, and sentiment analysis. Set risk parameters. Define high, medium, and low risk levels. Adjust holding. Increase exposure during favorable conditions and reduce during unfavorable ones. You know, I like that. I mean, so far what I've read. But anyways, I'm going to keep going and then come up with the strategy I want to implement later. Strategy 2, portfolio volatility equalization. Adjust position sizes to equally volatility contributions from different assets. Measure individual asset volatility. Use historical price data to calculate each asset's volatility. Adjust position sizes. Scale positions so each asset contributes equally to overall portfolio volatility. Rebalance periodically. Regularly rebalance the portfolio to maintain volatility equalization. Risk on, risk off strategy. Adjust exposure based on risk on, risk off market conditions. Identify risk sentiment. Use indicators like the VIX or Bitcoin dominance. Scale positions accordingly. Increase risk exposure during risk on conditions and scale back during hedge off risk. Regularly update risk sentiment indicators and adjust positions dynamically. Buy and hold portfolio with variable risk positions. Adaptive asset allocation. Use a risk-based allocation. Oh, snap, I lost it. Okay, here we go. Use a risk-based allocation framework to dynamically adjust position sizes. Execution steps. Assess asset risk levels. Calculate the risk of each asset using metrics like Sharpe ratio or rolling volatility. Allocate capital based on risk. Assign higher capital to lower risk assets and vice versa. Periodic review and rebalancing. Adjust the allocation periodically to reflect changes in risk levels. Strategy 2, multi-factor risk analysis. Use multiple risk factors to determine the optimal position sizes in a portfolio. Identify risk factors. Consider factors such as volatility, liquidity, and correlation and momentum. Calculate composite risk scores. Combine the individual risk factors into a composite risk score for each asset. Position sizing based on risk scores. Scale positions according to the composite risk scores, favoring assets with lower risk scores. Okay. Risk parity portfolio strategy. Allocate investments so each asset contributes equally to the overall portfolio risk. Calculate risk contribution. Determine each asset's risk contribution using standard deviation and correlation. Adjust holdings to equalize risk. Scale positions so that each asset has an equal impact on the portfolio's risks. Regular rebalancing. Periodically rebalance the portfolio to ensure equal risk. Okay, so I like this approach. I mean, let's go ahead and kind of sum it up though. So this is like a buy and hold with different risk allocations up and down. Here, I'm just going to say risk allocations. And then what did I learn from this? Well, while market is trending up, put more risk on. While market is trending down, less risk. Okay, what else we got from here? So determine the asset's risk. Hold a basket. Hold a basket of assets to manage risk. The tricky thing with that is crypto kind of all moves together. So I don't know. Strategy 2, multi-factor risk analysis. Use multiple risk factors to determine the optimal position sizes in the portfolio. Consider factors such as volatility, liquidity, correlation. Consider volatility, liquidity, correlation, and momentum. And then assign a risk score for each strategy and scale based off them. So buy and hold with adaptive risk. Use a risk-based allocation framework to dynamically adjust position sizes. Risk-based allocation framework to dynamically adjust position sizing. Okay. Calculate the risk of each asset using metrics like Sharp or rolling volatility. Sharp and rolling I haven't used that. Rolling volatility. See, this is why we do this. I haven't used rolling volatility before. Already, we won. We already won the game. We already got our monies back on this book. The book is $50, so I don't even know what that is. So this is it. This is it. I love this stuff. I love finding stuff that I don't understand or don't know. Assign higher capital, lower risk assets. Assign higher capital to lower risk assets. Okay. What else we got here? Use indicators such as VIX. Use indicators like VIX and BTC dominance. Duh. See, this is already paid back. It's already paid back. I can stop now. I can stop now, and I haven't even opened the book yet. I'm on page XI. I'm on the table of contents, and I've already paid the book back. These ideas, they're there, dude. Don't hit me. Don't hit me saying you need ideas, dude. Put the work in, B. Come on. Let's go. Come on. Let's do it together, dude. You put the work in, I put the work in. You show up, I show up. Every single day, dude. If I can do it, you can do it. I didn't want to get out of bed today, dude. But I got out of bed and I worked out. I meditated. Every single day, deals already been made. Don't negotiate with yourself, dude. Make a deal. Make a deal with yourself and don't negotiate. Just go. Rest in peace, King. Adjust position sizes to equalize volatility contribution from different assets. Okay, so measure individual asset volatility. Use historical price data to calculate asset volatility. Okay. Use historical price data to measure past vol. Okay, that's what I got out of that one. Change risk levels based on macroeconomic and signals. Use on-chain metrics, economic indicators, and sentiment. Define high, medium, and low risk levels. So like regimes. Increase exposure during favorable conditions and reduce. I mean, duh, but like this is good. This is still good. Use on-chain metrics, market sentiment, and economic to define high, medium, and low risk levels. All right. And then scale, obviously, scale up during low risk. All right, so drawdown based scaling. Adjust risk based on historical drawdowns to prevent significant losses. Drawdown based risk scaling. Adjust the size based on past DDs, drawdowns. Okay, let's see what else. The ADX indicator. Use MAs like 50, 200, or ADX Indy to identify trend directions. Sunny, who was my first podcast, she used the ADX heavy. Scale up during strong uptrends and vice versa. All right, let's keep it going. Let's keep it going. Look at this. We already paid this book back. We haven't even read a page. Use ATR. Yep. Use ATR or Bollinger Bands to measure market vol. Increase size during low market vol. Okay, perfect. Okay, that is the first few pages. Or that is honestly that was 100 pages according to the book. Now we've seen it, now we understand it. Now when you go in to read the book, it's going to retain better. And we're not reading to get notches on our belt. We're not reading to be cool and like, oh, I read 50 books this year. We're not doing that. We're searching. We're searching for strategies that we can then back test and then build into algorithms. That's what I'm doing here today. That's what I'm doing every day. It's not about the book, how many books you read, B. It's about how much gold did you get from them books. That's it. Let's go ahead and go into the next few chapters here. Slow trend following. Long only. Slow trend following, long and short. Slow trend following with trend strength. Fast trend following, long and short with trend strength. Okay. This is good. I like this a lot. Let's put a trend following ideas. I don't want no toggle B. I want the dots. Okay, let's go ahead and go through it. 200-day moving average and long strategy. Use the 200-day moving average to identify and confirm long-term uptrends. Calculate the 200-day moving average. Determine the 200-day moving average for each cryptocurrency. Identify entry points. Identify entry points. Sorry, I'm trying to stretch while I read. So I gotta stay. Okay, I'm stretching my leg right now. Identify entry points. Enter long positions when the price closes above the 200-day moving average. Exit the position if the price closes below the 200-day moving average and set a trailing stop loss orders. Simple moving average crossover long strategy. Use a combination of slow and slower moving averages to identify the long-term trend reversals. Calculate moving averages. Use the 50 and 200-day moving average. Identify entry points. Enter long positions when the 50-day moving average crosses over the 200-day moving average, golden cross. Exit strategy. Exit the position when the 50-day moving average crosses below the 200-day moving average, the death cross, or use a trailing stop. Donchian channel long strategy. Use Donchian channels to identify breakout points indicating a strong uptrend. Set look back period. Use a standard period such as 20 days for the Donchian channel. Identify entry points. Enter long positions when the price breaks above the upper band of the Donchian channel. Exit strategy. Exit the position when the price breaks below the middle band or use a trailing stop. Slow trend following long and short. So dual moving averages, long and short. Use a pair of moving averages to capture both upward and downward trends. Calculate moving averages. Use the 50-day and 200-day moving averages. Enter long positions when the 50-day moving average crosses above the 200-day moving average. Identify short entries. Enter short position when the 50-day moving average crosses above the 200-day moving average. Close position when the crossover conditions reverse or uses trailing stop. The RSI index, relative strength index, enhanced trend following. So combine RSI with moving averages to improve the trend following strategy. Execution, calculate the RSI, use a standard period such as 14 days. Identify long entries, enter long positions when the 50-day moving average is above the 200-day moving average and RSI is above 50. Identify short entries. Enter short positions when the 50-day moving average is below the 200-day moving average and RSI is below 50. Exit strategy. Exit positions based on the reverse of the RSI signals or price crossing the moving averages. Strategy 3, Bollinger Band based trend following. Use Bollinger Bands to identify trend continuation and reversals. Execution, calculate Bollinger Bands. Use a 20-day moving average with standard deviation bands. Enter long positions when the price closes above the upper band and the middle band is in an uptrend. Identify short entries. Enter short positions when the price closes below the lower band and the middle band is in a downtrend. Exit strategy. Exit positions when the price reverts to the middle band or use a trailing stop. The slow trending with trend index. Slow trend following with trend strength. ADX, which is the average directional index, enhanced trend following. Use the ADX to determine the strength of the trend and confirm entries. Calculate moving averages. Use the 50-day and the 200-day moving averages. Calculate the ADX. Use a standard period such as 14 days to calculate ADX. Identify long entries. Enter long positions when the 50-day moving average is above the 200-day and the ADX is above 25, indicating a strong trend. Okay, now we're cooking. Identify short entries. Consider short positions under opposite conditions. Reverse MA crossover with the strong ADX. Exit positions when ADX drops below 20 or based on moving averages? MACD, which is the moving average crossover divergence plus ADX strategy. Combine MACD with ADX to filter and confirm trend strength. Execution steps. Calculate MACD. Use the 12, 16, and 9 periods for the MACD indicator. Calculate ADX. Use the 14-day period. Identify long entries. Enter long positions when the MACD crosses above the signal line and the ADX is above 25. Exit trades based on the MACD signal line, crossbacks or trailing stops. Strategy 3, trend and volume confirmation. Incorporate volume to confirm trend strength along with moving averages. Execution steps. Calculate the 50-day and 200-day moving averages. Volume analysis. Look for increasing volume to confirm the strength of the trend. Identify long entries. Enter long positions with the 50-day moving average is above the 200-day. Identify short entries. Enter short positions when the 50-day moving average is below the 200-day with increasing volume. Exit strategy. Exit positions when the trend shows signs of weakness, like decreasing volume or moving averages, crossovers. Fast trend following. Long and short with trend strength. Short-term MA crossover with ADX. Use a shorter-term moving average combined with ADX to quickly capture trends and assess their strength. Calculate short-term MAs. Use the 10-day and 30-day moving averages. Calculate ADX. Use a 14-day period. Enter long positions when the 10-day moving average is above the 30-day and the ADX is above 25. Identify short entries. Enter short positions when the 10-day moving average is below the 30-day and the ADX is above 25. Exit strategy. Set tight trailing stops or exit when the short MA crossover reverses. Intraday Bollinger Bands with ADX confirmation. Use intraday Bollinger Bands for fast trend identification coupled with the ADX for strength confirmation. Execution steps. Calculate Bollinger Bands. Use a 20-period intraday moving average with the standard deviation bands. Calculate the ADX. Use a standard period of 14 for intraday data. Identify long entries. Enter long positions when the price breaks above the upper Bollinger Band with ADX above 25. Identify short entries. Enter short positions when the price breaks below the lower Bollinger Band and with the ADX above 25. Yo, this is gold, bro. Exit positions when the price reverts to the middle band or ADX declines below 20. MACD plus ADX trend following algorithm. Use the MACD indicator with ADX to catch quick trend changes and verify their strength. Breathe in, breathe out for that, dude. Use the MACD indicator and ADX to catch quick trend changes and verify their strength. Execution steps. Calculate MACD. Use shorter periods such as 6, 13, and 5 for the MACD. Calculate the ADX. Use the 14 period. They like that 14 period, don't they? Identify long entries. Enter position on a MACD line crossover above the signal line with ADX above 25. Enter short positions on the MACD line crossover below the signal line with ADX above 25. Exit trades based on MACD crossing back or ADX dropping below 20. All right, this is gold, dude. I've already made my money back on this book. It's crazy, dude. Books, everything's trapped in books. Don't hit me asking for strategies, dude. Just do the work, dude. That's it. Just do the work. That's it, dude. It's all here. It's all trapped in these books, man. That's it. All right? Don't hit me asking for strategies. I'm not going to do it for you. I'm not going to do the work for you. I'm your competitor, to be honest. But I am going to show you every single thing because I believe code's your equalizer. And if I show you everything, then I've done my service here on earth. I'm just pasting these in now at this point because it's just too much good stuff. Too much good stuff to pass up. Trend following ideas. Okay. Let's tap in with you guys real quick if you have any questions. 777KW, what's up? Andre, good morning. 777. It's about being consistent, improving, and learning. Absolutely. Absolutely. LOL to this guy, what he said. Hey, Mr. Moondev, what do you think about the LSTM models to make trades? I think you got to approach it differently. But, you know, LSTM models, not to make trades directly. 777, we got this, guys. Absolutely. Did you know the QQQ trade is negative during the open market hours? Interesting. My PCM installed, just texted. Got to get out of here before it's 1:15. I'll try to keep this playing. Yo, thanks, Derek. Good to see you, dude. 777. Yo, Clarence, what up? Gang. How are you, dude? Good to see you. So we are going through this book right now and just reading, because more ideas, the better. If you guys are curious, if you're just joining us today, this is the book. I'm reading the table of contents so I can get extremely aware of what's going to be inside of the book. And then when I read it, I'm really going to be able to retain things. And already we've gone through the first few chapters, I guess. And there's supposed to be 30 different futures trading strategies here. And I'm just getting these ideas because I built out this list here. And I have so many ideas. There's no excuses. There's no excuses not to have something to work on, you know? So it's really fun. I love this game so much, obviously. That's why I'm here so much. But much love to you guys out there. 777, everybody. I'm going to jump back in. We just going to keep it going. We're going to keep it going. Luxy, let's keep it going. Let's run it up. Let's run it up on a Saturday because everybody else is sleeping. These sleepy mofos, they're all sleeping. They're doing other things. Why would you do anything else? Until you get your hours in, B, your 4 hours a day keeps the doctor away, and then literally you have the rest of your day to do anything. That's why I'm here at 8 a.m. because ain't nobody can kick it before noon anyways. So they're all sleeping till noon. So I get my 4 hours in of coding, and then I literally have 100% freedom for the rest of the day. And it's amazing. All right, here's just 3 for this one. Okay, let's read it. Let's read it and then run it. So sure, here's trading ideas for concept multiple trends. Let's go ahead and say multiple trends. I don't know if this is all going to be one though. So because they're a little different. Multiple trend following rules, moving average crossover with the RSI confirmation. Combine multiple trend following rules such as moving crossover and momentum indicators like RSI to enhance trade signals. Calculate moving averages, use the 20 and the 50. Calculate RSI, use the 14. Identify long entries, enter long positions when the 20-day moving average crosses over the 50-day moving average and the RSI is above 50. Identify short when the 20-day crosses the 50 and the RSI is below 50. Exit trades based on opposite indicators. Okay, dual moving ADX, dual moving average and ADX filtering. Context or concept. Use multiple moving averages, crossovers, and filter the average directional range, which is the ADX, to identify strong trends and avoid false signals. Calculate moving averages. Use the 50 and the 200. Calculate the ADX 14, 50. Enter when 50 moving average above the 200. And the ADX is above 20. 5. Identify short entries. Enter short positions when the 50-day moving average crosses below the 200-day moving average. MACD and Bollinger Band trend following. Combine MACD signals with Bollinger Bands to enhance trend direction and reduce noise. Calculate MACD. Use the 12, 26, and 9 periods. For MACD, set Bollinger Band, set the 20 with 2 deviation. Enter long positions when the MACD line crosses above the signal line and the price is above the middle Bollinger Band. Identify short entries. Enter short positions when the MACD line crosses below the signal line and the price is below the middle Bollinger. And then exit trades on the opposite. Okay, so I'm going to take this here and I'm going to say this is multiple. I don't know if I understand what they're saying by multiple trends, but whatever. We're just getting familiar with this so we can go ahead and build it out. Basic carry, funding rate arbitrage. Take advantage of the discrepancies in funding rate between perpetual contracts and spot prices. Definitely a thing people do. Monitor funding rates. Identify cryptocurrencies with noticeable funding rate discrepancies. Execute spot and futures trades. Buy the cryptocurrency in the spot market and simultaneously sell it in the futures market where the funding rate is high. Collect funding payments. Hold the position until the funding rate payments make the trade profitable, then close both. Interest rate differential strategy. Trade crypto assets based on differences between lending and borrowing across different platforms. Lend and borrow. Lend the cryptocurrency on the platform offering the highest interest rate and borrow it on the platform with the lowest borrowing rate. These are getting juicy, B. These are getting juicy. I'm telling you, dude. So all we got to do is just spend time. It all compounds, bro. It all compounds. Speaking of compound, you can lend and borrow there. Basis trade strategy. Profit from the difference between spot prices and future prices of the same crypto. Identify basis difference. Track the basis spread between the spot price and the futures price. Buy the cryptocurrency in the market and sell a corresponding amount in the futures market. Hold the positions until the basis converges, then close both positions to lock in profit. Combine carry and trend. Combine trend following indicators with carry trade strategies to enhance profitability and reduce risk. Monitor funding rates. Identify high funding rate discrepancies. Check trend direction. Use a trend following indicator like the 50-day moving average to determine the trend direction. Execute trades. Enter carry trades only when the trend confirms the direction of the trade. Exit trades based on trend changes or funding rate converges. Momentum based basis trade. Use momentum indicators to guide basis trades between spot and future prices to increase the probability of successful trades. Execution. Identify basis opportunities. Track the basis between spot and futures prices. Analyze momentum. Use momentum indicators like MACD and RSI to gauge market sentiment. Execute trades. Enter basis trades when momentum confirms the direction of the basis trade. Exit strategy. Close positions on a basis convergence or loss of momentum. Strategy 3. Volatility, adjusted carry, and trend trading. Combine carry trades with trend following. Adjusting the volatility to optimize risk management and returns. Execution steps. Monitor funding rates and basis. Identify potential carry trade opportunities. Analyze volatility. Use indicators like HCR or Bollinger Bands to measure current market volatility. Trend analysis. Apply trend following rules such as moving over average crossovers. Adjust position sizing. Scale position sizes depending on the volatility to manage efficiency. Manage risk efficiently. Execute trades. Enter carry trades aligned with trend direction and adjusted for vol. Okay, exit trades on trend reversals, basis divergence, or significant volatility. Wow, dude. I was just stretching my hamstrings for that entire time. I got this yoga ball right here. And for that first one, last chapters, I did my right leg and then I did my left leg. You know I'm always standing, right? So chopper him out of here. Call the helicopter. That boy's dead. He just lost 278K. Get him all the way out of here, dude. But anyways, dude, if you have back pain, if you're tight, dude, stretch your hammies. That's it. Crazy, crazy, crazy. Oh man, I feel good, boy. All right, sick. So that was like the carry trade and the basis trade, which are both like pretty nice because it's like almost guaranteed profit, but ain't nobody gonna tell you that. So let's go ahead and catch up with anybody in the chat. Clarence says, I've recently learned about flash loans and triangular arbitrage. Ooh, boy. It's a pretty cool concept. Yeah, I've done some triangular arbitrage. Flash loans, not so much, because the arb is better if you can use your own cash. But man, that's a fun rabbit hole you're going down. I'm really glad you learned about it. It's a new dimension that wasn't here before. Being able to just like borrow cash and make the trade and then pay it back all in the same transaction. Glad you're looking at it. Clarence says, I've also been reading about using LSTM or other neural network models to filter order flow versus limit order books. Could be something to look into if you're interested in some high frequency trading. Yeah, dude. Thank you. I like that one. LSTMs to read OB and OB. Like we're doing that. We're gonna do that. Liquidation data, OI, etc. So I've tried to do that with order book data before, but the order book data, it was like I was doing it too early in the game where it was like costing me like $400 a day in servers just to store order book data because there's so much. So I gotta think of a different approach for that. But yeah, pretty much use ML to read in all our data sources. Let's give a big 777 to Clarence. Adding value to the stream. This is what I love about this place, man. You guys are so smart. Thank you for your thoughts, bro. Let's go ahead and keep it going. So that was the first part of the book. That was the first section, and there's only 4 sections. Nah, there's 6, but we're on page 229 now. You see how quick that was? I'm sure we missed things in the book, and I will read it later. But I'm actually going to probably not read this one word for word. I'll probably just use it as more of like an encyclopedia. Because this boy is $611. How many terabytes was that, Jane? Honestly, I don't know. Maybe it was like 200 a day. I don't know that. I had some help with that because I was really early in the game. You know how I learned machine learning right away, so I was like, yeah, order book data, because you need a lot of data for machine learning. But it was costing at least a couple $100 a day, and it was just like going skyrocketing because there's so much data. I don't know how many terabytes it was though. I think I might loop back now that I'm like deeper into the game. This had to have been two years ago at least. But now I'm deeper into the game. I can probably come up with some sort of solution to not have to store all the data or something like that. So thank you for the idea, dude. And find a better solution to store OB data. And if it's super expensive, I'm sure some of y'all want to get in on the order book data. So maybe we can just like do something of like, I'm down to pay that much money per day if it can make that much, you know, like, but again, this was back in the day, so I need to relook at it. So it doesn't, I appreciate your guys' mind. So it doesn't cost 200 a day. Okay. Dennis from Twitter says, I'm interested in learning how to trade. Where should I start? YouTube. All right, let's keep it going. Let's keep it going. All right, good seeing you guys. I'll be back. Deep Sight says, Clarence, are you on Discord? I learned about LSTMs in grad school to build translation models and didn't know they were used in crypto. Yo, Joseph, what's up, bro? I haven't seen you around here, dude. Thanks for coming through, man. I'm glad you're here. He says, I've been watching your videos, G, or I've been binging your videos, G. Appreciate the value. Can you make a vid covering building a pump fund machine learning monitor bot? I don't know, man. I don't love the concept of pump fund. Just like, I don't like pump and dumps. And I feel like most of those are them. But good thinking, like all power to you to do that if you want. I know a lot of people have been talking about it in the Discord, so feel free to jump in the Discord, dude. There's a link in the description, and I'm sure somebody's down to do it. I'm just looking for more robust things because pump fund is new, right? So I'm just not gonna spend my time on it right now because I don't know if it's gonna make it. And it's just more and more and more tokens being launched. So I don't know. It's just not for me, but I like how you're thinking, dude. So just jump into the Discord. It's at the very bottom of this page. And I know for a fact somebody's trying to do that. I've had that question so many times that it's like, if I was a YouTuber and trying to get views, I would do that. Like, I'd be like, oh yeah, pump fun because everybody's asking for it. But I can't do that. I got to stay focused on the things that I believe in my vision. And my vision is the RBI system. I believe in this. I believe in what I'm following. I want to trade on like perpetual exchanges more so than pump fund. But I really enjoy your idea and I like where your mind's at, man. So you seem like good vibes. So jump in the Discord, dude. It's free. It's free. Stat arb. Where we at with it? Okay, I'm gonna jump back into this next section here and I'll check in on you guys in a few. Okay, so adjusted trend following and carry in different risk regimes. Spot trend, accurate, carry. See, these are this is new stuff, dude. It's new to me. So here we go. Adjusted trend, volatility adjusted trend following. Adjust the trend following strategy based on market volatility to avoid noise during high volatility periods. Execution steps: calculate moving average, so the 200, then calculate volatility with the ATR. Adjust signal thresholds during high volatility. Increase threshold for trend signal to noise. Require a greater percentage change in price above the moving average. Buy when the adjusted threshold is crossed during low volatility. Adaptive trend filters. Utilize adaptive filters to adjust trend signals based on dynamic market conditions. Yo, what's good with this music in my ear though? Keeps chopping out. Use adaptive moving average filters like the Kaufman. See? Kaufman adaptive moving average. Interesting. Calculate efficiency ratio. I've never heard of this before. This is money, B. This is cash money. This is awesome. Calculate efficiency ratio. Adjust trend signals based on the efficiency ratio, the ER, to measure trend strength. Execute trades. Enter trades when the adaptive trend filter confirms a strong trend, and exit when the ER indicates weakening momentum. Seasonally adjusted trend following. Adjust trend strategies based on seasonal patterns observed in the crypto market. Identify seasonal patterns. Use historical data to identify recurring seasonal trends in the crypto prices. Adjust moving averages. Modify the parameters of moving averages during known seasonal periods to enhance trend direction. Enter and exit trades based on seasonality adjusted trend signals. Trend following and carry in different risk regimes. Risk on, risk off, trend following with carry. concept utilize risk sentiment, risk on, risk off, to dictate the application of trend following and carry strategies. Execution steps: monitor risk sentiment indicators. Use indicators like VIX volatility index or Bitcoin dominance to index to gauge market sentiment. Adjust strategies based on risk. Apply trend following strategies based on risk on regimes and carry trades during risk off regimes. Execute trades. No, seriously. Never talking to you, Siri. I'm sorry. I love you. And she got me distracted. Implement trend following strategies based and carry strategies for varying volatility regimes. I am going to take a seat. I know I never sit down. You back? We back? We back? Where'd my mic go? Oh, maybe it's because I'm moving my thing. It turns off then. I was saying I'm going to finally take a seat. It's been weeks since I've taken a seat. I think my legs is a little dead from these double days. But it's all good, B. We still here. Define volatility regimes. Identify low, medium, and high volatility environments using ATR or Bollinger Bands. Apply trend following in low volatility. Use long-term moving averages in low volatility periods for smooth trend signals. Apply carry trades in high volatility. Focus on basis trades or funding rate arbitrage during high volatility to manage risk. Macroeconomic condition-based strategy. Use macroeconomic indicators to guide the application of trend following and carry strategies in crypto trading. Identify macroeconomic indicators. Monitor global economic indicators like interest rates, inflation, and geopolitical events. Adjust trend strategies. Apply trend following strategies during stable macroeconomic conditions. Adjust carry strategies. Focus on carry strategies during periods of economic uncertainty and market stress. Align trades with macroeconomic indicators to enhance strategy effectiveness. Spot trend following with moving averages. Concept is to apply moving averages crossovers specifically to the spot market to identify emerging trends. Take them out of here. Get them out of here. Here's your Solana. Here's your Sol liquidations you're looking for, social. Calculate moving averages. Use the 50 and the 200 to identify the trend. A lot of moving averages stuff here, Lux. Identify spot trend. Enter long positions when the 50-day moving average crosses above the 200-day moving average. Close position when the 50-day moving average crosses back below the 200. Spot momentum strategies. Concept is use momentum indicators to capture long-term trends in the spot market. Execution: calculate the RSI. Use the 14-day RSI. Identify overbought, oversold condition. Enter trades when the RSI crosses over the 30 or below the 70. Follow identified momentum for short-term gains in the spot market. The concept of this next one is the spot trend with Bollinger Bands. Use Bollinger Bands to identify trend continuation or reversals in the spot market. Set Bollinger Bands. Use the 20-day moving average and 2 deviation bands. Identify trend continuation. Enter long positions when the price breaks above the upper band and trend direction is confirmed. Enter short positions when the price breaks below the lower band and trend reversal indicators are present. Close positions based on reverting to the middle band or opposite band breakouts. Accurate carry. Funding rate arbitrage with accuracy. Precisely calculate them and monitor funding rates to exploit arbitrage opportunities in the crypto market. Monitor funding rates. Use real-time data to track funding rates across different exchanges. Identify arbitrage opportunities. Enter positions in the market and opposite positions in the futures market with favorable funding rates. So spot one position and then futures the other position, opposite ways. Maintain positions to collect funding rate payments accurately. So that's another free cash one. exit positions when funding rate disparity diminishes. This funding rate arbitrage is like free money. It's just not a lot, but it's nice and it's nice. Implement precise basis trade strategy to exploit differences between spot and futures prices of crypto assets. If you can work with the fees, it works. Track basis differences, accurately monitor the spread between spot prices and future prices, execute basis trades, enter positions in the spot market and corresponding ones in the futures market where basis differences indicate profitable opportunities, close the basis trade, hold position until basis convergence or desired profit is achieved, ensure precision, use advanced data analytics and tools to ensure accurate basis calculations and reduce slippage, risk-adjusted carry trade strategy, adjust carry trade positions based on precise risk assessments to maximize returns while managing exposure, assess risk levels, use indicators like the Sharpe ratio and the value at risk. Nice. To assess the risk of each carry trade, adjust position sizes based on calculated risk levels to optimize risk-adjusted returns, execute trades based on funding rates, interest differentials, and accurate risk measurements, continuous monitoring, regularly review risk metrics, and adjust positions to maintain optimal risk. Okay, so this was dope. This was good. All of these are good, dude. I mean, not every single strategy is going to be the one, but the connections you make are the connections that you make at the end of the day. So you got to make them. You got to make the connections. I can't do that for you. You know? I'm going to read with you. I'm going to study with you every day. Yeah, just yell at the adjusted. Okay, and then this last one, or not last one, but we're just getting started, B. What time is it? I don't even care. Yo, Siri, I'm never gonna freaking talk to you. This is like the second time today on a different phone, 2 phones. I have a Spanish phone and I have an English phone, and this lady is all up in me on both sides. She's trying to get on both sides. Accurate carry trade. Dude, this is a wealth of knowledge here. This thing we've been building out every single day, it's all on YouTube, dude. Every single one of these I put all here. You understand what I understand. I'm gonna check out the chat real quick, check in with y'all. Bless G. Joseph says, I'll for sure hop into the Discord. Been seeing some devs on Twitter making crazy gains. Yes. Clarence says at Deep Sight, nah, I'm not, but I should. To be honest, I like Moon's YouTube page because it's quicker to chat with him directly. It is for sure, because I definitely don't respond to the Discord messages. Clarence also said, and LSTMs and others neural networks have been used on order flow data in stocks for decades now. Yeah, that's true. It wasn't accessible to the average individual because like Moon said, you need massive amounts of data, and the cost associated with it doesn't always justify running the models. With cloud-based servers now, the game has become more accessible. Absolutely. I like where you're thinking, bro. Clarence says most ML models are still primarily used for risk assessment or portfolio optimization, but when you get down to the microsecond transaction, that's where ML models can be applied. DeepSight says to Clarence, awesome, definitely interesting how they apply to HFT. Hamza, what up, bro? Haven't seen you here before. I'm glad you're here. Much love to you, 777. When you close your eyes at night or during the day, whatever you imagine in your life, bro, I really hope that you get it. And I hope you know that There's no roadblocks in life. It's only in your mind. So I'm glad you're here, Hamza. Welcome to the Moon Dev arena. You're asking what's on the screen at the bottom left, far left. That's the price change in the last 60 minutes. Right next to that is orders, two panes of orders, small orders, bigger orders. To the left to the right of that, this blue, red, and green one. That's the total liquidations in the last few hours, days, not days, but that sound here, we just hit the pinnacle. This is when we hit the pinnacle, B. They said we are here, we're breathing. You can see these are liquidations here in the pink right here. These are big liquidations, people getting liquidated. These are huge orders here, and these are smaller liquidations. Jane says, when you do that large data thing, Moon, hit me up. I may be able to save you some money on storage. Yo, super sick, Jane. I'm gonna put that on my notes. Hit Jane up on, or when I do the story, the OV data. You got like a company that does that, or what you thinking there? Let's go ahead and dive back in, and I'll jump back into the chat here after this section. Again, this is the book that we're going through right now. So if you want to be like me, I'm going to read this book later. I'm just trying to get up to date on all of the terminal, or all the systems, the terminology, things like that, you know? And then it's going to be a breeze to read, or at least search for the things that I need, because I'm a searcher, dude, just like you. Jane says, I started a hosting company in 2007. How do you say that? I'm 2007? No, 2007, sorry. This learning multiple languages really is messing up my English. It's funny. 2007. You still have servers and suppliers. I closed it to mainly the public in 2013, but still got some long-term clients. So, okay. Yeah, this is the book we're reading right now, or we're not reading the book word for word. So if you want to get it, you can get it. I have no affiliation other than I bought it. I bought it off Amazon. $50, $50. $40. I want to dive in. I want to keep going. You guys cool with that? You guys cool if I share some more strategies? Throw a 777 in the chat if that's cool if we keep going. I know this has been a lot today, so I don't want to overwhelm you. Throw a 777 if you want to keep diving in and finding more strategies here. If we get a couple 777s, I'll make sure to keep going. I don't even know where we stopped in the last one. Forgot. Accurate carry, okay. All right, we got 2 777s in here. Let's see if we hit 5 777s. I'm gonna keep going. We need 5 777s, and I'll keep going with showing every single strategy in this book, or at least the beginner part of it, at least. Or you guys want me to do something else, man? I'll play video games. That's true. I'm gonna start with those 3. Come on, peoples. All right, well, we got 3 people. We need 5 777s. So this money for these books, B. I'm trying to show you everything that I know. Jane says 77. That doesn't count. You already said it. We got Bob Smith. We got one more. Who's gonna be the big guy? Who's gonna be the big guy that pushes over the edge? There's 5. Bob 1. Elijah. Bob 1. Jane. Oh, Jane was trolling. Jane's trolling. All right. Well, it's been a good day then. Much love to everybody. Couldn't hit 5. There's 26 people here. We can't even hit 5. Can't even hit 5 people that lead with love. That's wild to me. Oh well. Oh well. I could just do this. You know I'm going for 4 hours, so you know I'm just gonna do this on my own. I'm gonna do bad on my own. I don't need no help, little mama. Jane says, come on, people. We need more. Elijah says, I'm making a bot right now that will buy new launches as soon as the pool drops, then sell on a certain percentage. Trying to get some knowledge here for more strategies, but thanks for the stuff, man. My pleasure. My pleasure. There's unlimited strategies out there, so we just got to find the ones that work for us. One more deep sight says, I can't believe I put a goal of 5 people to say 777 and we got 24 people up in here and we only got 4 777s. Is this trash? Like, you not want to see this? Hey, yeah, hey, the 4 of us, we'll just jump in a Zoom then. Let's just jump in a Zoom. Yeah, let's do that. Let's just jump in a Zoom. I don't know what everybody else is doing. That's wild. I wish I could kick people out. I'd kick everybody out. I'd kick everybody out. There you go, Haas. Let's get it. I'm hitting run now, and we're going to keep running. There you go, Haas. There you go. There you go. We got to 5. Still pathetic. Hey, FYI, yo, this is pathetic that we got 24 people here and we got 5 777s, but I lay it to rest. I lay it to rest. Thank you. 777 to y'all. Much love. I don't know what y'all are doing. Maybe you guys are sleeping. Maybe that's it. Y'all sleep, I eat. All right, let's get it. Trend and carry allocation. Is this where we're at? Yes. Concept is to allocate funds dynamically between trend following and carry strategies based on prevailing market conditions. That's a good idea. And relative performance. So we monitor the trend using MACD to identify prevailing trends in the cryptocurrency markets, assess carry opportunities, calculate the funding rates or basis trades to identify carry trade opportunities, allocate capital dynamically if strong trend signals are detected, like the MACD crossover with high momentum. Allocate more capital to the trend following. If the carry trade opportunities are favorable, allocate more there. I like this actually. So it's trend, you're trend following, but also doing the carry trade. Rebalance periodically, regularly review performance and rebalance capital allocation between trend and carry strategies. Strategy 2, risk-weighted allocation. Allocate capital between trend following and carry strategies based on risk-adjusted performance metrics like Sharpe ratio. Calculate Sharpe ratios. Evaluate the Sharpe ratio for both trend following and carry strategies over a specified time period. Determine risk allocation. Allocate more capital to the strategy with a higher Sharpe ratio, signifying better risk-adjusted returns. Scale allocations inversely proportional to each strategy's volatility to minimize risk. Monitor and rebalance. Adjust allocations dynamically as the Sharpe ratios and volatility metrics change over time. Adaptive market regime allocation. Adjust allocation between trend and carry strategies based on market regimes such as bull, bear, and sideways markets. Identify market regimes. Use technical indicators like moving averages or trend strategy indicators to determine market regimes. Allocation rules for each regime. Bull market favor trend following strategies with higher allocation. The bear market favor carry strategies if they have positive returns. Otherwise, reduce exposure. Dang, it's noon. Sideways market, allocate more evenly between trend and carry. I like this actually a lot. I like mixing them. Normalized trend. Use the Z-score normalized trend following. Yo, we are using the Z-score in our stat Arbot. Normalize price movements to identify trends based on statistical significance and using Z-scores. Calculate moving averages. Compute the 20-day and 50-day moving averages for crypto. Calculate the Z-score of the price relative to its 20-day moving average. price of 20-day divided by standard deviation of the last 20 days. Identify trade signals. Long entry. Enter a long position when the z-score exceeds a positive threshold like +2, indicating a strong upward trend. I like this. Enter a position when the z-score falls below a negative threshold, indicating a strong downtrend. Okay. Close position when the z-score reverts to 0. It's a lot like we're working on right now. Bollinger Bands normalize trend strategy 2. Use Bollinger Bands to normalize trend signals and identify breakout opportunities. Execution steps. Set the Bollinger Bands. Use a 20-day moving average with bands set at 2 deviation. Normalize trends. Identify trend strengths based on how far the price is from the upper band. Enter trades. Buy when the price breaks above the upper band, indicating a strong upward trend. Sell when the price breaks below the lower band, indicating a strong downward trend. Exit on mean reversion to the middle band and use trailing stops. Trend normalization with ATR. Normalize trend signals using average true range to account for the volatility differences. Execution steps. Calculate ATR. Use a 14-day for the ATR to measure market volatility. Normalize price movements. Normalize price changes by dividing by the ATR price divided by ATR. Identify trading signals. Long entry. Enter trades when the normalized trend exceeds a positive threshold like normalized trend over 1.5, or a short enter. Enter trades when normalized trend falls below a negative threshold like negative 1.5. Exit strategy. Exit trades when normalized trends revert to 0 or based on profit. Trend following asset classes. Cross asset trend following. Apply trend following strategies across different cryptocurrency asset classes such as large cap coins, altcoins, and stable coins. Okay. Classify asset classes. Categorize cryptocurrencies in large cap, altcoins, and stable coins. Apply trend indicators. Use moving averages or MACD for each asset class to identify trends. Allocate capital. Large cap coins. Allocate more capital to large cap coins as they tend to be more stable trends. The altcoins. Allocate the altcoins when strong trend signals, but manage risk due to higher vol.
Rouse me from my slumber.
Regularly review and rebalance the portfolio based on prevailing trends in each asset class. Sector-based trend following. Follow trends within specific sectors of the cryptocurrency market, such as DeFi, NFTs, and Layer 1 protocols. Identify sectors. Categorize cryptocurrencies into different sectors like DeFi, NFT, and Layer 1s. Okay. Monitor sector trends. Use the sector-specific indices or moving average to track trends within each sector. Positive trends, which is sector allocation. Allocate more capital to sectors showing strong upward trends. Negative trends. Reduce exposure or short sectors showing strong downward trends. Diversify across sectors. Maintain diversified exposure across multiple sectors to reduce risk and capture broader market trends. Strategy 3, okay, trend following. Using futures and spot markets. Combine trend following strategies across both futures and spot markets to enhance flexibility and leverage. Execution. Identify trends in spot and futures. Use moving averages and trend indicators separately for spot prices and future prices. Execute trades based on liquidity and leverage. Spot market. Use a lower leverage and lower term or longer term positions. Futures market. Use for higher leverage and shorter term trend strategies. Hedge positions. Use future contracts to hedge spot market positions to manage risk more effectively. Adjust the mix of spot and futures positions based on trend strength and liquidity and risk appetite. Nice, dude. Nice. We're killing this, B. Killing the game. I'm glad you're here. Let's get 5777s in there. Let's try it again. You want me to keep going? Throw 577s. I'm going to answer every question. Let me just get over there real quick. Let me get over there. Get 5 in there. Trend plus carry So they love that carry trade, huh? I mean, it's because it's automated profit. So let's get 5777s in there, and I'll check your chat. I'll check your chat. Just checking in here on the market, see what's Gucci. Looks like Solana's up a bit. Whiff up a bit. Everything up a little bit, but you know, it's been down bad. It's been down bad for a few days. When everybody's calling a breakdown here, that's usually when it goes up. Hey, people will be really short in here. It's really weird, but whatever. That's them. Yo, look at that. We already got 4 777s. Let me go ahead and answer these questions, and we get one more 777, and then we're going to keep it going. We're going to keep it moving. Come on, motivate me. Send your love. That's your love. That's all you got to do is send love. 777. Send love. Love, love, love. We get 5 777s, and I'm going to keep going. I'm going to read some of these comments here, answer questions. Keep up the good work, bro. Seasoned developer said, thank you, bro. Thank you so much. 777 Haas, 777 seasoned developer, 777 Lone Star, peace and goodness. Love to you, dude. Hey, Haas says, hey, saw your last stream an hour ago, then now you are alive. Have you developed any genetic trait? I was working on a genetic algo, but I kind of stopped. I'm gonna dive back into it though. Thank you for genetic algos plus Alrima. Okay, let's see here. Jane says, I'm coding and designing graphics ready for Tuesday, but I'm here. I'm working, but I'm here. Ilya says, have you thought about watching for other bots operating and either jumping in on their trades to increase the impact of trading against in some way benefit? My main down to auto trading is my main doubt probably is I have algorithms where mainly I'm getting correlation between lick and concentration. Thought that somebody might see it operating and work against it. I mean, you're probably not trading that much size, so I assume that somebody's going to be worried about you. Like me neither, so, you know, any of us. I mean, if you're trading like a lot, hundreds of millions maybe, but do you use a strategy of sending profits somewhere else so there isn't much to drain given moment? No, I don't, but that's a good idea. Clarence says, to Deep Site, here's a good article to start with. It's about stocks, but the logic can be applied to crypto too. Okay, I asked for 5 777s. Let's count them up. If we got 5 777s in here, I'm going to keep going. I'm going to keep running it up, bro, every single second. Let's go ahead and see where we stopped at. So I need to get a pen out. That's what I need to do. So I can stop scrolling back. Trend following asset classes. Okay, that's where we were. Okay, got it. So how many sevens we got in here? We got Eli 777, Jane 777, Deep 777, Bob Smith 777, 52. I think that's 5. Winner chicken dinner. 52 says, hey bro, I haven't seen you before. How are you, dude? I'm glad you're here. I hope you get everything you ever wanted in this life, dude. It's all you, dude. You got this, B. Hey, much love. I'm making you guys open your hearts up because you get anything in this world as long as you lead with love. And the 777 just passing me love, I'll pass it right back to you. You see me on Twitter, you see me anywhere, dude. Just throw the 777. That's what this gang does, all right? All right? Let's get it. Let's keep going. Let's keep going then. And we got enough 777s in there that I'm going to just keep going. I'm going to keep the show on the road. I'm going to keep going. We're going to keep finding more strategies. So just to recap, if you're just jumping in, I have this book sitting in front of me. It's called Advanced Futures Trading Strategies. I know we're trading crypto, but there's connections that can be made. I'm going through the table of contents right now because if I go through the table of contents and learn everything from Luxy, then when I do dive into this book, I can go pick and choose what I want to learn more about. You see what I'm saying, dude? It's a little more efficient than reading the whole book page to page. I'm just looking for golden nuggets, dude. So, you know, if you want to buy this book, you probably should. I mean, if you like what you're seeing here today, then go buy the book. I have no connection with this guy. I don't know who he is, but this is great so far. And, you know, show love, show love, show love. Show love to him, show love to me, and let's keep it moving, B. So we're on strategy 19 in the book, cross-sectional momentum. We're on strategy 19 in the book, but I told Luxy to give me 3 strategies per each of them. So we're on like strategy 57 or something. Cross-sectional carry. Dang, we're already on page 339. So we're just going to do that. Those two, cross-sectional momentum and carry. And put your strategy ideas in there too, dude. If you got ideas, throw them in. Throw them in because, you know, we already have a couple people that have added stuff here. Like, I think Clarence gave us this one. Thank you, dude. I can't remember your name, but genetic algos and Arima, I love it. I love the way you guys think. So we're going to go into this next section here of the book. And this is about carry still. So, okay. So cross-sectional momentum, relative strength ranking. Rank cryptocurrencies based on their past performance and invest in the top performing assets while avoiding or shorting the underperformers. Define the universe. Select a basket of cryptocurrencies to track, like the top 50 by market cap. Calculate the returns. Compute the past returns for each cryptocurrency over a specific period. Rank the assets. Rank the cryptocurrencies based on their returns. Allocate capital to the top end performers and avoid or short the bottom end. See, I like that. I like that right there. Regular rebalancing. Reassess and rebalance the portfolio on a regular basis. Momentum spread trading. Exploit the momentum spread between the strongest and weakest performance cryptocurrencies to generate returns. Execution steps. Define the universe. Select a diverse set of cryptocurrencies. Calculate momentum scores. Determine the momentum scores for each asset based on recent performance metrics. Identify extremes. Identify the top quintile of the best performers and bottom quintile, I don't know how to say that, of the worst performers. Long short portfolio. Construct a long short portfolio by going long on the top performers and short on the bottom performers. Hedge and risk management. Implement hedging strategies and regularly monitor and rebalance the portfolio to manage risk and capture momentum spreads. Momentum with risk adjusted returns. Incorporate risk adjusted momentum by focusing on assets with high returns per unit of risk. Execution steps. Calculate Sharpe ratios. Compute the Sharpe ratio for each cryptocurrency based on historical returns and volatility. Rank cryptocurrencies. Rank the assets based on their Sharpe ratios. Select top performers. Select the top end cryptocurrencies with the highest Sharpe ratios. Allocate capital proportionally based on the Sharpe ratios to create a risk-adjusted momentum portfolio. Frequent assessment and rebalancing. Regularly assess and rebalance the portfolio to maintain the optimal risk-adjusted exposure. Cross-sectional carry. Funding rate arbitrage. Capture carry trades by exploiting differences in the funding rates across various futures contracts. Identify funding rates. Monitor the funding rates for perpetual futures contracts. Oh, monitor the funding rates, you see. Oh, that's what we got right here, dude. We here. We ain't going nowhere. I'm monitoring the funding rates all day. Rank cryptocurrencies based on their funding rates from the highest to lowest. Go long on cryptocurrencies with positive funding rates, earn carry, and short assets with negative funding rates, pay carry. Hedge and risk management. Implement risk management strategies such as stop loss orders and position limits. Regularly rebalance. Frequently assesses funding rate and rebalance the portfolio to capture continuous carry opportunities. The basis spread trading. Exploit the differences between spot prices and future prices of cryptocurrencies to capture carry returns. Execution steps. Identify basis differences. Monitor the basis spread between spot and futures prices for multiple cryptocurrencies. Rank the basis spread. Rank the basis spreads from highest to lowest. Implement trades. Go long on cryptocurrencies with a positive basis futures price above spot and long the ones with a negative basis. Manage position sizes. Adjust position sizes based on the magnitude of the basis spreads to optimize risk adjusted returns. Regularly monitor basis spreads and rebalance the portfolio to maintain carry exposure. So interest rate differentials. Capitalize on interest rate differentials by borrowing and lending crypto assets on different platforms. Identify interest rates. Monitor lending and borrowing rates across various DeFi platforms. Rank interest rates. Rank assets based on their interest rate differential between platforms. Lend assets on platforms with high lending rates and borrow on platforms with low borrowing rates. Diversify carry trades across multiple cryptocurrencies to reduce risk. Regularly assess interest rate changes and rebalance the carry trades to optimize returns. Dude, this is good. Hey, this is the next section. Y'all want a next section? I need five 777s in the chat, and we're gonna go on to the next section, dude. I'll keep going as long as you throw the sevens, B. I'll keep going. I got energy now. I mean, it's probably the what's it called I drank earlier, or half of one at least. The half of Celsius. That stuff is crazy. Obviously, cross-sectional momentum and carry. Boy, that stuff woke me up, didn't it? Oh, I wrote that exact thing above. Ain't no difference. All right, let's get it. All right, 5 7 7 7s, and we keep going. That's it. That's it. All we need is 5. I'm gonna answer all questions here, and we are now on part 3, which is page 339. Ooh, these are getting juicy too. 5 7 7 7s. We got one from 52 peeps. Elia, we didn't get one from him actually. Bob Smith, we got one. Deep Sight, we got one. So 1 2 3 4. Okay, got it. You guys are locked in now. You guys are locked in. That's what I love to see. I love to see it, dude. Elias says, you really caught my ear with the borrow and low interest rates, lend on higher interest rates. Yeah. There's some good stuff in this one, huh? So just to review here, we're going through this book. I'm going through the table of contents, so then I understand everything, and then I can pick and choose where I actually read, you know? Yo, Tone Loke, what up, bro? 777. Elias says, anyone know the best lending and borrowing platforms in crypto? Currently, I think it's Aave. I like Aave the best. But honestly, I don't even use ETH anymore, so... it's wild, isn't it? Here we go with some lickies. Licky loo. These lickies. Licky. Lickety luda. Lickety doodah. Lickety dickety. Lickety, lickety. Aave, AAV. Compound as well. Compound solid. I like Aave and Compound. Those are my favorites. I mean, when I was back on ETH, oh man. Last cycle, I was all over the Aave. Let's see how Aave is doing, actually, because Aave is a bank, in my opinion. And you buy the bank stock. I mean, not necessarily. I'm not trying to pitch nobody on nothing, but I liked the Aave thesis a lot back in the day. It's just down bad. All these old coins are bad. Ooh. See, I was up here. I was talking about Aave. This is when I was liking Aave. Like here, oh, I like this move. But dang, dude, this is down bad. I like it actually. I might just have to throw some and lock it up, you know? Have a little spot position of just yeah, that could be cool. I'm gonna write that down. Look into Aave again. Because you know, you have some spot bags here and there. Ain't gonna kill nobody. Mike, I'm curious, what do you guys think? Do you think tech is dead in crypto? Like, for me, like, I'm only watching like memes and stuff. And obviously trading these bigger tokens. But like, the only thesis I see in crypto right now is the memes. All right, let's keep it going. I'd be curious to hear your thoughts though. We got the 777s we needed, and I will be back. I'll be back when I'm done with this chapter. How about that? Breakout. Value. Acceleration. Skew. Dynamic optimization. All right, let's run it. Okay, I'm also gonna get this set up right now. Advanced directional strategies. These are all advanced directional strategies. Run it up, dude. Run it up. 777, do you matter? 777 tone. There you go, bro. Yeah. Elias says, here we go. Borrow ETH on compound for 1.92 and lend for 2.08. That's 0.16% for doing nothing. Yep, dude. That's why you here, B. Come on. Get the ideas out. Get the ideas. Let's get the ideas out. More ideas, more better. Okay, so multi-time frame breakout. So these are breakout strategies. Combines breakout strategies across multiple time frames and filter false signals and increase the accuracy of breakouts. Execution steps: identify key levels, determine support and resistance levels for or trading ranges on multiple time frames, e.g. like the 4 hour, the 1 hour, and so on. Ensure the breakout is supported by significant volume. Confirm across time frames. Only enter a trade if the breakout is confirmed across multiple time frames. To enter trades, enter a long position when the price breaks above resistance across multiple time frames. Short, enter a short position when the price breaks out across multiple time frames. That's interesting, actually, to look at multiple time frames when looking at breakouts instead of just like one. You know, I think a lot of people just start with one, including myself. Set stop loss. Place stop loss orders significantly or slightly below the breakout level. Take a deep breath. Somebody just lost 44K. All right. Volatility breakout with ATR. Use the average true range to adjust breakout levels based on market volatility. Calculate the ATR. Use a 14-day ATR to measure market volatility. Set breakout levels. Determine breakout levels by adding / subtracting a multiple of ATR to and from recent highs and lows. Enter trades. Enter when price exceeds the high plus the multiple. Yo, the chopper just took him out. He just took that boy out. He had to rescue him. It's done for him. He lost 579K. What would you do today if you lost 579K, my dude? I don't know. I would be hot. I don't think I'd come back. I don't think I'd ever play this game again if I lost 500K like that on a liquidation. I'd be done. Enter trades. Enter when the price exceeds the high plus the ATR multiple. Enter when the price falls below the low minus the ATR. Place stop loss. Set stop losses based on a fraction of the ATR to prevent the premature exits. Adjust for volatility. Regularly adjust breakout levels based on changes in the ATR. Strategy 3, false breakout reversals. Identify false breakouts that revert back within the trading range shortly after breaking out. Execution steps. Identify key levels. Determine significant support and resistance levels. Monitor breakouts. Watch for breakouts that fall or fail to sustain beyond the breakout level. Confirm false breakouts. Confirm the volume and price action signals such as long wicks or rapid reversals. Enter reversal trades. Enter long positions when a false downside breakout reverts back above the support. Short. Enter short positions when a false upside breakout reverts back to below resistance. Set tight stop loss. Use tight stop losses just outside the breakout levels. Profit targets. Target middle of the range or next support resistance levels. Value trading strategies, fundamental metrics, and price divergence. Utilize fundamental valuation metrics to identify divergences between market price and intrinsic value derived from blockchain metrics. Evaluate fundamentals. Analyze metrics such as transaction volume, active addresses, and network growth. Identify price divergence. Compare these fundamentals to market price to spot undervaluation or overvaluation. Enter trades based on divergence. Enter long positions on assets showing positive fundamental growth and price lagging. Enter short positions on assets showing negative fundamental indicators but price leading. Set stop loss. Place stop losses based on percentage deviations from entry points. Review fundamentals regularly. Regularly assess fundamental metrics to adjust and close position. Mean reversion to intrinsic value. Capitalize on deviations from an estimated intrinsic value based on historical relationships and statistical analysis. Execution steps. Determine intrinsic value. Use historical price ratios, revenue multiples, or other valuation techniques. Identify mean reversion opportunities. Track assets that deviate significantly from calculated intrinsic value. Enter the trade. Buy assets significantly below intrinsic value. Sell assets significantly above intrinsic value. Set the stop loss. Use standard deviation based stops to mitigate risk or manage risk. Objective profit targets. Exit trades as prices revert toward intrinsic values. Strategy 3, discount and premium versus NAV. Trade crypto assets based on their deviations from the net asset value of underlying assets. Calculate NAV. Determine the NAV of assets backed tokens, stablecoins, ETFs, commodity backed tokens. Monitor discrepancies. Track market prices against the NAV. Another one. Damn. Jose, I hope you're good. Aparicio appears, right? Aparicio means appears. Google Translate. Did we find him? Because I think we found him in this stream. Aparicio. Maybe I didn't spell that right. Aparicio. Aparicio. I was saying it right. Appeared. Okay, we found him. We found Jose. Good thing. Good vibes. Good. Glad you're okay, Jose. Much love to you, 777. Define stop losses based on acceptable deviations. Adjust position sizes. Dynamically adjust position sizes based on the magnitude of deviation from the NAV. Acceleration trading strategies. Acceleration bands. Use acceleration bands to identify rapid price movements indicating strong momentum or impending reversals. Set acceleration bands. Calculate bands based on the moving average in the ATR, typically the 20 and 20 ATR, 20 moving average in the 20 period ATR. Identify trading signals. Buy when price breaks above the upper acceleration band. Sell when the price breaks below the lower acceleration band. Set stop loss. Place stop loss orders within the bands to guard against false signals. Profit targets. Set profit targets based on multiples of the ATR or middle band reversion. Strategy 2, momentum acceleration indicator, the AO. Utilize the acceleration deceleration AO oscillator, that's new to me, to gauge momentum changes and identify buying and selling opportunities. Execution steps. Calculate the AO. Use the difference between the 5 period and 34 period simple moving average. Identify signals. Long, enter when the AO crosses above the 0 and enter when the AO crosses below the 0. Confirm with volume. Ensure price moves are accompanied by volume confirmation. Set stop loss. Manage risk with stop loss orders based on recent highs and lows. Trailing stop. Use trailing stops to lock in profits and trend materializes. Okay, these orders flying through. When orders are flying, volatility is higher. Chill when flying. Okay, combine the RSI. So RSI acceleration, combine the RSI indicator with price acceleration to identify overbought or oversold conditions with strong momentum shifts. Execution steps. Calculate the RSI. Use the 14-day RSI to measure momentum. Identify acceleration. Look for rapid changes in RSI along with price movement. Enter trades. Buy when the RSI crosses the 30 with increasing momentum, and sell RSI when the 70 with decreasing momentum. Set stop loss. Use tight stop losses below recent lows or above recent highs. Profit targets. Exit trades when the RSI reaches overbought or oversold territories. Skew trading strategies. Volatility skew arbitrage. Exploit differences in implied volatility between similar options to capture the arbitrage opportunities. Execution steps. Monitor implied volatility. Track implied volatility for options at different strikes or expirations. Identify skew opportunities. Look for significant skew discrepancies between options. Construct arbitrage trades. Buy undervalued options with lower implied volatility. Sell overvalued options with higher implied volatility. Hedge underlying. Hedge delta exposure using the underlying asset. Monitor the skew. Adjust positions as the skew changes to lock in profits. Strategy 2, volatility surface skew. Utilize the volatility surface to trade skew by focusing on options at different moneyness levels. Interesting word, moneyness levels. Execution steps. Calculate volatility surface. Use strike price and expirations to construct the volatility surface. Identify skew patterns. Look for patterns indicating overbought or oversold options. Trade the skew. Buy call options if call options are relatively cheap to compared to put. Buy put options when they're relatively cheaper than calls. Hedge positions. Manage risks by delta hedging with the underlying asset. Adjust continuously. Regularly adjust positions as skew changes over time. Strategy 3, cross asset skewing. Trade volatility skew by identifying mispricings across different but correlated cryptocurrencies. Identify correlated assets. Track implied volatility and skew between highly correlated crypto pairs. Detect volatility divergence. Look for significant divergences in volatility skew between the pairs. Execute pairs trades. Go long on the asset with a lower implied volatility skew and short the asset with higher skew. Hedge and manage risk. Implement risk management through delta neutral strategies, regular assessments, continuously monitor volatility and adjust positions as necessary. Dynamic optimization trading strategies. 3 strategies. Strategy 1, adaptive moving average optimization. Optimize moving averages dynamically based on recent price behavior to improve trend following signals. Execution steps. Set initial parameters. Begin with standard moving averages of the 20 and the 50. Measure performance. Track the performance of these following averages over predefined periods. Optimize results. Adjust moving average periods dynamically based on historical price behavior and performance metrics like Sharpe ratio. Re-optimize regularly. Regularly re-optimize parameters to adapt to changing market conditions. Implement trading. Use the optimized moving averages for generating buy and sell signals. Strategy 2, genetic algorithm optimization. Ooh. Use genetic algorithms to optimize trading strategy parameters by simulating evolution and natural selection. Execution steps. Define strategy parameters. Identify key parameters to optimize, e.g. like the moving average, RSI thresholds. Initialize population. Generate a population of candidate solutions with random parameter values. Evaluate fitness. Backtest each candidate solution and evaluate performance based on a fitness function. Selection and reproduction. Select the top performing candidates and create a new generation through the crossover and mutation. Iterative optimization. Repeat the evaluation and selection process for multiple generations to converge on optimal parameters. So we did a bit of this a couple weeks ago. Strategy 3, machine learning based strategy optimization. Concept is to apply machine learning techniques such as reinforcement learning to dynamically optimize trading strategies based on historical and real-time data. Define the environment. Define the trading environment, including market data, technical indicators, and trading rules. Set up the learning agent. Configure the reinforcement learning agent with actions like buy, sell, and hold, states, market conditions, and rewards. The profit and loss. Train the model. Use historical data to train the model through trial and error, optimizing the agent's decision-making process. Evaluate and fine-tune. Test the model on out-of-sample data. And fine-tune implement the trained model for real-time trading, continuously learning and adapting on new market data. All right, you want more, dude? We got more. I got more energy, dude. I'll keep going. As long as you light up. I need 5. I need 6. I need 6 777s. The deeper we get, the more 777s we need to keep going. All right, go ahead and throw the 77s. If we get 6 777s, we're moving on to the next chapter, dude. Advanced directional strategies. We get enough 777s, we might as well go and finish this whole book. We're on page 417 out of 611. How many 777s we got? 1, 2, 3, 4. Love the Kalman filter. Oh, what up, bro? Nate, what up? Kalman filter. Anything Nate says, I write down. Glad you're here. Nate loves it. What else you got, dog? We did genetic algos, Eureka, back in 2014. You see any success out of it? What about the Markov chain? I don't know. Thank you, though. I'll put it on the list. Pairs trading is so 1990s. Oh, damn. Nate's up in here dropping it down. Still battling with the lagging indicators, DR. Remember, they are peaking at 65 to 69% accuracy. So, okay. Swing trading. Dope. Thanks for your knowledge, bro. You need to think about target as a function of ATR. I used 4 periods back. Quant Freedom was saying Moondev ain't all that. He said He said his channel is better. Yeah, it is better. Hey, why does Quan Freedom have beef with you? Are your bots competing? No, but he came up in here trying to compete with me, and I'm not trying to compete with nobody. I'm just competing with myself. This is probably Quan Freedom right here in a body bag. 517K. You know what happened to Quant Freedom? I know this for a fact. Quant Freedom had he got liquidated that day. So you could tell by the way he was typing. He got liquidated that day, so he wanted to take it out on me because I didn't get liquidated, dude. Because I don't get liquidated. I can't. So Quant Freedom's over here capping. We got beef now though. So he's scared. He's scared. He's like, he wants to come on the show or whatever. He's like asking to be on my stream, but he's too scared to do it here in PR. I said I'd buy his flight. I put him and his girl or boy up in a hotel, but he won't come. I don't get it. I've never done a collab before. He wants to do a collab. So I was just like, yeah, all right, if we're gonna do a collab, let's do it in person. He's scared now because he was talking so much ish. He's scared that I'm gonna hurt him or something. I'm a good guy, y'all know that. I'm not gonna hurt the guy, but I would like to see him in person now that he said some things. I wish he's probably here right now. He'd be watching all of my stuff. It's super weird. And then he had his one chance to say something and he said something negative. It's like, it's all love. Look at this. Silly Kid says 777. Jane says 777. Bob Smith says 777. We lead with love around here, B. Come at me again. You coming at all of us. So much love coming right back at you. 777 trading guy. 77752. Nate Mursky says he's good. I'm glad you're here. We tried predict the price of gold 5 minutes into the future. Nice. Nuno says 777. Good to have you. Deep Sight says 777. Okay, I think we got the 6. Genetic algos are about 50% accurate in predicting the future, so we scrapped it. What is with the 777? Nate says, I believe you can have anything in this world as long as you lead with love. So we just passing love back and forth. We get some trolls in here, Nate. We get some trolls that are real mean and like not leading with love because, you know, we're in trading. So you know, these gamblers are up in here gambling, getting liquidated, and then coming yelling at me. And so it's just like, we just spam the chat with 777 because that opens your heart up. And if you lead with love in this world, you can have anything in this world. I promise you, dude. You teach me some things about trading, dude. I'll teach you some things about getting anything you want in this world as long as you live with love, bro. Smile at people, say hello, how are you, and really mean it. How are you? Not like how are you? You know what I'm saying? 777. All right, I'm gonna dive into this next chapter. If you're just jumping in here today, I'm just going through the table of contents of Advanced Future Trading Strategies by Robert Carver. I have no affiliation with this dude. I just heard it's a good book. So the way I read now is I go through and I read the table of contents to get it all in my mind, and then I can go ahead and just search for alpha. Nate says, a shame. They should take your course before they diss you. They should, but it's okay. I mean, like, I'm the only one on YouTube that has the provable, like, I put in work. I'm not the best in the world by any means, but I'm here every day and I'm gonna keep putting this work in. You know, I'm okay with not being the best right now, dude. I'm gonna keep showing up, I'm gonna keep swimming, and I'm gonna keep getting better. Soon I'll be good, then I'll be great. And then, hey, maybe someday I'll be the best, but it doesn't even matter. You don't have to be the best in this game, but I know I'll keep going, stepping on their necks. They sleep, we eat. It's Saturday, dude. Everybody else is taking a day off. I got mad people hitting me up like, yo, Moon, let's go to the beach. No, dude, I'm not done yet. You're trading too. I got traders hitting me up right now saying, let's go to the beach. I'm like, all right, you go to the beach. I'll see you later, but I'm gonna step on your neck for at least 4 hours a day. That's it. And I know for a fact every single day I get a little bit better. It's about 1% better every single day. So 777, thank you guys for being here. I will go ahead and dive into the next chapter of this book. Again, no affiliation other than it's sitting in front of me right now. I'm trying to get up to speed with all of the ideas that they have, and then when I want, I can go ahead and just be like, okay, what do we have here? And then I can just hop in the book. hop in the book and see if they can explain it even better, because I'm sure Luxie's giving us 3 ideas for each idea they give. So technically, you know, this book has 30 trading strategies in it, but we're getting 90. So that's pretty cool. Some of them are going to be trash. Actually, I would say most of them are going to be trash. But all we're looking at for golden nuggets, dude. All right, let's keep going. These are fast directional strategies. Fast directional strategies. I don't even know what that means, but that's why we're here. That's why we're here, dude. Because if I don't know what it means, I'm sure some of you don't know what it means either. Fast, mean reversion. Safer, fast, mean reversion. So just 2 on this chapter, or this is a section. This is section 4, so page 417 if you're following along. If you're following along. All right, let's get it. Let's get it. Let's go. RSI based mean reversion. Use the relative strength index to identify overbought and oversold conditions for quick mean reversion trades. Execution steps. Calculate RSI. Use a short period RSI, e.g. like the 7, to capture fast momentum shifts. Execution steps. Calculate the RSI. Use a short period RSI to capture fast momentum shifts. Identify overbought and oversold levels, 70, 30, yada yada, same thing. Buy when the RSI crosses the 30, indicating an oversold condition. Sell or short when the RSI crosses the 70, indicating an overbought condition. Set stop loss. Place stop loss orders a few percentage points away to manage risk. Take the profits. Exit the trade when the RSI returns to a neutral level. Bollinger Band mean reversion. Use Bollinger Bands to identify price reversion opportunities after strong deviations from the mean. Set Bollinger Bands. Use a 20-period moving average with plus or minus 2 standard deviation bands. Identify signals. Price overbought as price touches or exceeds the upper band. Oversold, price touches or falls below the lower band. Enter the trade. Buy when the price touches the lower Bollinger Band. Sell or short when the price touches the upper Bollinger Band. Set stop loss. Place stop loss orders just beyond the bands to prevent large losses. Exit strategy. Exit trades when the price reverts to the middle band. Strategy 3. Moving average channel mean reversion. Trade based on price reversion to the mean using a channel constructed from moving averages. Execution steps. Calculate moving averages. Use 2 moving averages, for example a 10 and 30. Determine the channel. The channel is defined by the high and the low of the shorter moving averages against the longer moving averages. Identify signals. Overbought, price exceeds the upper boundary of the channel. Oversold, price falls below the lower boundary of the channel. Enter trade when the price falls below the lower boundary. Sell or short when the price exceeds the upper boundary. Set stop loss. Use recent highs and lows outside the channel for stop loss placements. Take profits. Exit when the price returns to the channel's median. Safer fast mean reversion here. Strategy 1. RSI with confirmation from MACD. Concept is combine the RSI and the MACD indicator to confirm mean reversion signals, reducing false signals. Go ahead and execute this way. Calculate the RSI using the period RSI of like 7 or the MACD, and then calculate MACD, the 12, 26, and 9 period for MACD. Identify combined signals. Long when the RSI is under 30, MACD line crosses over the signal line. Short when RSI is 70 or MACD line crosses below the short line. Enter trades. Execute trades based on confirmed signals from both RSI and MACD. Set the stop loss. Use recent price swings for stop losses. Exit strategy. Exit when one of the indicators signals a reversal. The VWAP, They not like okay. Use VWAP as a benchmark to identify mean reversion opportunities, offering more precise entries and exits based on volume adjusted price levels. Calculate the Continuously compute the intraday. Identify deviations. Spot significant deviations from price moves more than the specified distance from the enter trades long. Buy when the price is significantly below the and shows signs of reverting. Short. Sell or short when the price is significantly above the exit strategy. Exit trades as the price approaches the strategy 3. ATR, average true range. Filtered mean reversion concept. Combine mean reversion signals with ATR to filter out trades during high volatility periods, reducing the risk exposure. Okay, we're going to calculate the RSI. Use the short RSI like the 7, or calculate the ATR like the 14. Identify signals RSI under 30 and current ATR below the threshold indicating low volatility. RSI over 30 if you want to short, and current ATR below the threshold indicating low vol. Enter trades. Execute trades when both conditions are met. Set stop loss. Use a fraction of ATR for flexible stop loss placements to adapt to changing volatility. Exit strategy. Exit trades when the RSI moves towards neutral levels or ATR indicators increasing volatility. All right, sick. Yo, 7. We need 7 777s in there if you want me to keep going, dude. I need 7 in there. I'm showing you everything. This whole book, B. This is the whole book. I hope I don't get in trouble for this, B. I hope this is only promoting it because I haven't even opened it. Well, I guess I have opened it. It's open right here, but I'm on page XII. So if we get 7 777s, I'm gonna keep going and we're gonna keep chopping this book up, so when we do read it, we'll know what we're getting ourselves into, and we can search. We can just go search. We can be searchers searching. You feel me? Let's get it. All right, I need 7 777s. 7 777s. All right, let's see it. If I see it, I'll keep going. If not, I got the beach calling my name, dude. I got the beach calling my name. It's like, Moondev, come down here. Oh my goodness, look at all these cheeks down here, Moondev. There are so many cheeks out here. Come on, come on. All right, I need 7 777s. All right, I'm about to check right now. I'm about to check. I believe in you guys though, so I'm gonna say relative value strategies, value strategies, relative value strategies. Let's see. I believe in y'all. Let's see if we got it. We got 1 from Clarence, 777 to you, dude. We got 1 from Tone Lock, 777 to you, dude. We've got 1 from Fib Net Newton, that's 777 to you. Bob Smith, 777 to you, dude. Jane, 777 to you, dude. Deep Sight, 777 to you, dude. Deep Sight or Billy Rex, 777. So what is that? 1, 2, 3, 4, 5, 6, 7, 8, dude. We got 8. We got 8, dude. We got 8. We got 8. Yo, thanks, bro. Nate says, have a good one. Appreciate you coming through, dog. It's always good to have you here. I have some Wasaki code that will crush everyone that has a bad timing to say about y'all. I appreciate you, dude. Thank you, dude. Thank you for standing up for me. Everybody in here, I love you guys so much. You guys are so kind, and you're so kind with your time and your vibes. The 777s, I know it's kind of weird, I guess, for new people or whatnot, but it's just a way to virtually send love without, you don't have to say nothing to me. Like, I get it. We're not all gonna chat. We're not all like, you know, I'm kind of like a lurker, you know. I be watching videos, not commenting so much, but like, I wanted something to just like pass the good vibes around, because there's just not enough good vibes in finance, B. There's so much scarcity out here. There's another way to do this. And I'm trying to do this whole algo trading finance thing the exact opposite of what everybody else is doing. So that's 777 passing love. is really meaningful to me. So I really appreciate you guys throwing that back and forth. It really means a lot. And I see you guys throwing it at other people. It's awesome, dude. Yeah, much love, much love. Yeah. We got everybody up in here. Mr. Brad Beats 777. Tone Money up in here too. What up, 777? I thought you might have changed your name to Tone Loke. Tone Loke, because we got another Tone up in here now. Alaya, I see you, dude. 777. Much love to everybody here. Just to catch you up if you're new here. Right now, I've got this book sitting in front of me, Advanced Future Trading Strategies. Everybody's saying this is the best book ever, or it's a good book for strategies. So what I'm doing here is I'm asking Luxy by just hitting /. I got this prompt saved, and I'm just like, hey, I'm about to read this book. Give me 3 trading ideas based off of each idea. Now, this book has 30 fully tested trading strategies. I haven't opened the book yet. I'm still on the table of contents because this is how I read books for trading now. It's because I'm really just looking for strategies, right? I'm looking for alpha. So no reason to read every single word. I mean, some books I do, of course, but for this one specifically and a few in the past, like probability stuff, statistics stuff, I'm looking for like secrets. So I'm reading the chapters or the table of contents, and once I get all of these done, I'm gonna have this fat list of ideas. I mean, we already have a fat list of trading ideas. There's no excuses. There's no excuses not to go. If you want this, just go, bro. There's unlimited books, dude. Hunting for golden nuggets. Exactly, my guy. Exactly. So we got a bunch of 777s in here. So you guys are my life. I appreciate you. You guys power me. You guys empower me like with so much energy. So yeah, this is the book if you want to grab it. I have no affiliation with Homeboy, but so far it's been great. So let's go ahead and jump into that next chapter. I saved it, right? Relative strength. Okay. We here, we present. People are getting licked and we're over here. We're over here doing this. Okay. Cross. Instrument. Relative value strategies. Below are relative value strategies. Cross instrument. Spreads. Cross instrument triplets, calendar trading strategies. All right, let's get it. So we got three goodies here. That should be 9 for us. So we actually getting more than the book, you know what I'm saying? Like we're getting the book plus. Okay, so cross instrument spreads. So pair trading with leading and lagging indicators. Identify a pair of highly correlated cryptocurrencies and trade based on relative performance and mean reversion. Execution steps. Identify pairs. Select 2 cryptocurrencies with a high correlation like BTC and ETH. Calculate the spread. Compute the price spread between 2 assets. Establish mean reversion thresholds. Determine historical average spread and set standard deviation based on thresholds. One second. All right, let's get it. So long spread, go long on the lagging asset and short on the leading asset. When the spread is significantly above the mean. Short spread, go short on the lagging asset and long on the leading asset when the spread is significantly below the mean. Set stop loss. Place stop loss orders beyond the standard deviation bands to control risk. Exit strategy. Close trades when the spread reverts to the historical mean. Volatility spread arbitrage, trade on the volatility difference between two related instruments. Execution steps, identify volatility levels, use historical volatility or implied volatility of two related cryptocurrencies. Calculate volatility spread, monitor the volatility spreads between the two assets. Enter trades, long volatility, go long on volatility of the first instrument and short on volatility of the second when the spread is below historical norms. Short volatility spread, go short on volatility of the first instrument and long on volatility of the second one when the spread is above historical norms. Hedge positions, use options or futures to manage risk. Regularly check volatility levels and adjust positions accordingly. Exit when the volatility spread normalizes. Yield spread arbitrage. Utilize differences in yield or funding rates across two different cryptocurrencies. Monitor yields. Track the yields or funding rates on different platforms or exchanges for each cryptocurrency. Calculate yield spread. Identify significant yield differences between the two assets. Execute trades. Go long on the higher yielding asset and short on the lower yielding asset. Short higher yield. Go short on the higher yielding assets and long on the lower yielding assets. Hedge delta exposure. Use futures or options to manage market risk. Regular reassessment. Continuously reassess yields and adjust positions for new ops. Exit strategy. Close positions when yield spreads converge or hit target levels. Second one, cross instrument triplets. Triangular arbitrage and cryptocurrency pairs. Yeah, we was just talking about it earlier. Exploit price discrepancies in a triplet of related cryptocurrency pairs on various exchanges. Execution steps to identify the triplets. Select three interrelated cryptocurrency pairs like BTC ETH, ETH USD, and BTC USDT. This is some mind-blowing stuff. Monitor prices. Continuously track the prices these pairs of multiple exchanges. Detect deviations in the prices that allow for arbitrage. Execute the trade. Buy BTC and USDT on exchange A. Convert to B on exchange B, and then convert ETH to USDT on exchange C. See, this works better as like on DEXs because then you don't have to move the coins. You can have it on like I don't know, like Uniswap and SushiSwap, and then whatever the other ones are. Consider transaction costs. Ensures the profits exceed transaction costs and fees. Implement algorithms to automate trading and continuously monitor new opportunities. Concept 2 is triangular correlation arbitrage. Utilize high correlations between three assets to create a hedge trade, reducing risk exposure. Select correlated triplet. Identify three correlating assets like BTC, ETH, and LTC. Calculate relative value. Monitor price ratios or spread relationships among the three assets. Look for deviations from historical norms in these relationships. Enter trades. Buy the undervalued asset and short the overvalued asset based on their correlation relationships. Hedge risk. Use futures or options to minimize exposure. Exit strategy. Close trades when prices revert to historical norms. Strategy 3 is the implied volatility triplet arbitrage. Exploit discrepancies in implied volatility across options on three related assets. Execution steps. Track implied volatility. Monitor implied volatility levels for options on three correlated cryptocurrencies. Calculate volatility spread. Identify significant discrepancies in implied volatility. Enter trades. Long, low volatility. Buy options on the asset with the lowest implied volatility. Short, high volatility. Sell options on the asset with the highest implied volatility. Neutral hedging. Use a third asset to neutralize directional risk. Adjust positions. Regularly reassess implied volatility levels and adjust positions as needed. Exit strategy. Close trades when vol spreads normalize. Calendar trading strategy. Monthly rollover calendar spread. So trade the price differences between the front month and next month futures contract. Identify calendar spreads. Select a crypto futures contract and identify the first month and the next month. Monitor spread, track the price spread between these contracts, enter trades, long calendar spreads, buy the next month contract and sell the front month contract if the spread is expected to widen, short calendar spread, sell the next month contract and buy the front month contract if the spread is expected to narrow, consider expiration, be mindful of contract expiration dates, adjust positions, adjust trades based on changes in spread dynamics, exit strategy, close positions before expiration or when the spread reaches target levels. Number 2, earnings release calendar spread. Exploit anticipated volatility changes around scheduled events such as earnings releases or network upgrades, execution steps, identify key dates, determine significant events like quarterly earnings, major upgrades for cryptocurrencies. Yo, I was gonna put an idea down, but I'm not trading equities right now. Construct calendar spread, long volatility, buy short-term options, the front month. Okay, I think we did read that. Monitor positions, track volatility change at. Wait, did we read that? Construct the calendar spread, long volatility, buy short-term options front month, and sell longer-term options next month or further out to capture volatility spikes. Short volatility, reverse the trade if expected reduced volatility after the event. Monitor positions, track volatility changes as the event date approaches. Manage risk, use delta neutral strategies to hedge directional risk. Exit strategy, close positions before the event to limit exposure to actual outcomes or exit when volatility targets are achieved. Seasonal trends, calendar spread. Use seasonal patterns in cryptocurrency prices to trade calendar spreads. Analyze historical data, identify seasonality and recurring patterns in cryptocurrency prices. Identify seasonal achievables, for example, end of month price setups or quarterly closings. Set up calendar spreads, high seasonality periods. Enter long calendar spreads on periods historically, showing price changes. Low seasonality periods. Enter short calendar spreads on periods historically showing price decreases. Use options or futures. Implement trades using options or futures based on seasonal trends. Monitor and adjust. Adjust positions if seasonal patterns change or new data becomes available. Exit trades at the end of the seasonal period or when desired profit levels are reached. Yo, all right, we got one more chapter. We've got literally one more chapter in this book. If you want me to go ahead and give you all of the ideas from this next chapter, I need eight 777s. I know this is asking a lot. This is asking for everybody to participate, but all you have to do is hit 777 in the chat. 777 is passing your love to not just me, but it's passing it to everybody, and it's benefiting you, dude, because it's like smiling at somebody, you know? It's like you're opening your heart up. You're able to then get whatever you want in this world because you are in a position of love. It's not like going to come to you instantly, but if you're always in a negative state of mind, if you're not giving love to people, how do you expect to get the hardest things in the world? So if we get 8 777s, we're going to go ahead and attack this last one. And I really won't go over it if we don't get the 8. I really won't. So I'm going to tee it up here because I believe in you guys. This is the last one. We went through 611 pages. Well, more like 600, but below are tactics. If we get 8 777s in there, then we will go on and do this next part. If not, I'm out. I'm going to the beach. This is my life, B. I love this game so much, but I need your encouragement. I need the 777s. I need the love. You know, like cheer me on a little bit, and then I'll give you everything I know and everything I'm looking to know. You know what I'm saying? Like, I'm learning right now with you. But if you want to see more, I need 8 of those 777s. I'm not playing. I will turn this off and do the rest by myself. Not to threaten you or anything. Not to threaten you to give love to everybody here. But Anil 777 says it twice. Doesn't count. Thank you, though. Deep Sight. Moon is trying to push us out. I am trying to push you out. There's too many people in here. I'm doing everything I can to push you out of here. Because remember, we're competing at the same time. I'm showing you everything, but I'm trying to push out the lames, you know? So we got 1, 2, Sasquatch 777, Jane 3, 777, Fib 4, 777 to you, Bob 5, 777, Deep Sight 6, 777. Nah, we ain't gonna make it. Doesn't look like we making it on this one, fellas. We only got 6. Yeah, unfortunately, Jane, that sucks, huh? I don't make the rules, B. Well, I do make the rules, and I follow them. We got 6 777s in here. There's 26 people. All I asked for was 8. All I asked for was 8. 2 more people. If you want to go ahead and finish this off, it's just 2 more people. Yeah, I know. I get it, bro. I'm forcing you to say 777. And look at this number, dude. 777 right here. Okay, we got a 777 from Bitcoin. Oh, another 777 from Bitcoin. Come on, bro. Come back to this tab. Oh, another 777 from Bitcoin. Dude, is it just going to be me and Bitcoin? All right, Clarence, I see you, dude. 777, thanks for jumping in. We need one more person to say 777. And when you see me anywhere in this world, dude, just send that love, bro. Send that love, dude. Send that love. I promise you will have such a better life, a better day. Every single day, as long as you leave with love. Lisa, KW, you guys really came through for the whole team. Okay, if you don't know where we're at right now, this is where we're at. Thank you, guys. We hit the goal. We hit our 777 goal. That means you're leading with love. That means I'm going to keep leading with love. And I know this is about algo trading. I get it, dude, but I feel like I'm put here for more than that. You know? Like, I want to tell you my secrets. How do I always have a great day? How do I get everything I want in this world? And this is how I do it, dude. I'll be smiling at people randomly. I'll be passing good energy to them. It's a cold world, B. It's a cold world. Borna 777. So I've got this book in front of me right now. And this book is supposed to have a lot of good trading strategies in it. So I'm asking Luxy, hey, take these ideas in the table of contents and expand on them. Let's go deeper than that, Lux. And now I'll see everything before I even open up the introduction of the book. So now I can search. So that's what we're doing. I've got no affiliation with this book or this guy, but he added value to the world, so he deserves your guys' dollars if you want to buy it. I mean, no pressure, but so far I've gotten my money's worth 10 times over. All right, this is the finale, ladies and gentlemen. This is the finale. I don't know if I'm ever gonna share this information, this video, because this one, we went hard. This is like 90 strategies, dude. Let's get it. Thanks for showing up today on your Saturday. I'm excited to see what you build. Everybody that didn't say 777 in the chat, y'all are dead to me, but everybody else, love you. Don't hit me. Hey, if you didn't say 777 in the chat, do not hit me ever. Don't hit me on the DMs. Don't tag me in the chats, nothing. That's all I asked for is a couple 777s, B. 8 of you are killers. 9 of you are killers. The rest of you, I don't know what's going on. I don't know what's up. You must be one of those negative people out there that always are worried about the negative. Oh, what's the worst that could happen? Dog, what's the best that could happen? What's the best? Most love to you, Jane. Thank you. Contract selection and rolling. Optimizing contract selection based on liquidity and volume Choose futures contracts with the highest liquidity and trading volume to minimize slippage and ensure efficient fills. Execution steps. Analyze liquidity and volume. Nice. Regularly monitor the liquidity and daily trading volume of available futures contracts. Opt for contracts with the highest liquidity and volume to minimize transaction costs. Choose contracts with the highest open interest for added liquidity. Oh, these are good ideas, dude. These are good ideas. Determine rolling period. Identify an optimal period before expiration to roll contracts, like 5 to 10 days. Execute the roll. Close the current position and open the same position in the next contract month. Yield and basis consideration in contract selection. Select futures contracts based on yield differentials, like carry and basis spreads to enhance returns. Execution steps. Monitor basis and yield. Measure the basis spot price versus futures price and yield carry returns across different contracts. Identify opportunities. Select contracts with favorable basis and higher yields. Enter positions when the basis spread or yield is attractive. Initiate trades in the relevant contract. Rolling strategy. Roll over positions to the next favorable contract based on yield and basis analysis prior to expiration. Volatility based contract selection. Use volatility measures to inform contract selection, focusing on contracts where volatility aligns with trading strategy goals. Execution steps. Measure historical volatility. Assess the historical volatility of available contracts. Analyze implied volatility. Examine implied volatility of futures, of options on futures to gauge market expectations. Okay. I just had to write something down about the stat RBOB. Analyze implied volatility. Examine IV of options on futures to gauge market expectations. Select contracts. Choose contracts that align with desired volatility profiles, either seeking high volatility for aggressive strategies or low volatility for conservative approaches. Roll contracts to maintain desired volatility exposure. Regularly reassessing volatility metrics. Execution. Market making and limit orders. Use market making strategies and limit orders to achieve better execution prices and reduce trading costs. Execution steps. Set limit orders. Place limit orders at strategic price levels to capture bid-ask spreads. Monitor order book. Continuously monitor the order book for optimal order placement. Algorithm implementation. Automate market making algorithms that adjust limit order based on real-time market condition. Capture spreads. Earn profits from capturing small spreads in high frequency trading environments. Strategy 2 would be smart order routing. Use SOR to achieve optimal execution by routing orders to multiple exchanges and liquidity pools. Execution steps. Identify exchanges. List all possible exchanges and liquidity pools to route orders. Implement SOR algorithm. Develop or use an existing SOR algorithm that determines the best execution venue based on price, liquidity, and latency. Split large orders. Break down large orders into smaller chunks to minimize market impact and achieve better execution. Monitor performance. Continuously evaluate the SOR algorithm's performance and adjust parameters for optimal execution. Strategy 3, execution. Concept. Use execution to minimize market impact by spreading orders evenly over a specific time period. Execution steps. Set execution period. Define the period over which to execute trades. Divide orders. Split the total order size into smaller, equally sized parts to be executed as regular intervals. Implement TWAP. algorithm. Use an algorithm to automate order execution at defined intervals. Monitor market conditions. If the market conditions change significantly, adjust the TWAP strategy accordingly. Cash and compounding. Strategy 1. Reinvestment of profits for compound growth. Concept: reinvest trading profits to compound returns and grow capital over time. Execution steps: track profits, regularly calculate net profits from trading activities, reallocate, automatically reinvest profits into existing strategies or new opportunities, adjust position sizes, increase position sizes based on the larger capital base from reinvestment earnings. Continuous monitoring, monitor the performance and ensure positions are scaled appropriately based on compounding returns. Strategy 2, interest-bearing accounts and yield farming. Use idle cash in interest-bearing accounts or yield farming protocols to generate additional income. Identify yield opportunities. Identify reliable platforms offering interest-bearing accounts or yield farming. Allocate idle cash. Allocate idle funds to these platforms to earn interest or farming rewards. Allocate, reinvest yields. Reinvest earned interest or rewards back into the trading strategy compound growth. Monitor and adjust. Regularly review the platform's stability and ROI, reallocating funds accordingly. Strategy 3, automated compounding algorithms. Implement automated algorithms that manage and reinvest profits consistent compounding. Yo, this is actually a good idea. A lot of these are good ideas. I don't know why I just said it on this one, but if you could get like an automated compounding on like Aave or Compound, that's super sick. Create or adapt an algorithm that automatically allocates a portion of profits back into trading positions. Define parameters for reinvestment. Use the algorithm to execute reinvestments without manual intervention. Regular review, periodically review and adjust the algorithm settings to optimize compounding effects. Risk management, dynamic position sizing. Adjust position sizes based on real-time risk assessments to manage exposure effectively. Calculate risk metrics. Use metrics such as VAR, value at risk, volatility, and Sharpe ratio to determine position sizing. Adjust position sizes dynamically based on calculated risk metrics. Define maximum permissible risk per trade and overall portfolio. Automate adjustments. Implement algorithms to automate position sizing adjustments based on changing risk conditions. Strategy 2, stop loss and take profit strategies. Implement strict stop loss and take profit levels to manage downside risk and secure profits. Execution steps: set stop loss levels. Determine stop loss levels based on technical analysis like recent support or resistance levels or percentage limits. Set take profit levels. Define take profit levels to lock in gains at predefined targets. Automate orders. Use algorithms to automatically place stop loss and take profit orders as trades are executed. Regular adjustment. Review and adjust levels regularly in response to market conditions. Strategy 3, risk diversification through portfolio allocation. Diversify risk by allocating capital across multiple strategies, assets, and instruments. Execution steps: define allocation rules. Establish rules for diversifying investments, e.g. by asset class, strategy type, market sector. Implement portfolio analysis. Use diversification metrics such as correlation and standard deviation to analyze portfolio composition. Allocate capital. Spread investments across various assets and strategies to minimize risk concentration. Rebalance portfolio. Regularly rebalance the portfolio to main diversification targets and adapt to the market changes. Dude, we just went over 90 trading strategies. Do you think one of these would work? Of course. Of course one of them is going to work. It's just how are you going to run it? How are you going to manage your risk? Tactics. Trading tactics. Dude, I just went over 90 trading strategies with you. 90. Look at all these, dude. We have unlimited to do. Unlimited to do. I will be back every single day. Dude, if you want to learn this stuff from me, I put everything in the bootcamp. Everything I know is in the bootcamp. The bootcamp, there's a link below. It's only $69. That's crazy. I teach you exactly how to automate your trading step by step. I show you how to backtest. I give you a bunch of algos that you can learn from. You have to build your own edge, but at the end of the day, I can probably save you a couple years of time. For $69, jump in if you want. 100% money back guarantee forever. You can read what everybody else says. It's not about me, dude. Everything's here. Read what other people say about it. There's 100% money back guarantee. You can jump in today and then jump out tomorrow. That's fine. Get your money back. I give money back guarantees because I know I'm a random dude on the internet. And when I got started, dude, nobody was sharing this information. So I finally have a place that I can show you step by step in short, concise videos. I know this video was long. I know we learned a lot today. 90 different strategies. If you want to know everything I know and how to code all this, even if you don't know how to code, I teach you how to code in Python, bro. I did everything. I did everything so you can learn this way, way quicker. I'm here for a bigger reason than just making a ton of money with algo trading. I want to help some people. So I'm going to keep helping. All right? If you need more help, it's in the bootcamp. If you want to do the free option, then just go to my YouTube channel and watch the videos in reverse order from oldest to newest. You got two options, B. There's literally nothing holding you back. I get people asking me, like, how do I find strategies? You literally just saw me rack off 90 strategies. Thanks to this book, it gave us 30, and then I asked Luxy to give me 3 ideas for each. 30 times 3 equals 90.